Hey guys, just wanted to go over some of what I saw today. First, what I have marked out here, the purple up here is the regular trading hours close. I've got this purple here, regular trading hours low of day from yesterday, and then purple here was the overnight low from yesterday. Yellow is price action levels, the 73 level I've been using forever, 65 as well, and then 43, which we haven't seen in a while before today. And then this blue one was a live read when I call that 48, which we'll get back to in a minute. So you can see after we closed the session yesterday, we sort of floated down towards 73. Both Tesla earnings, probably maybe a little bit about the Treasury General account refilling as well. Ultimately, we actually gap opened below 73 and left that gap unfilled at the beginning of the session. Came down, tagged 65. And then your typical algo early Globex session, mega bed to come up here and fill this gap. That happens. We channel here 65 to 73 for the early part of the night, filling out a little bit of a distribution, nice distribution here. Ultimately breaking down rather spectacularly and just liquidating straight down. Probably some single prints in here. No volume, just straight pure dump, ultimately forming a distribution here. Again, make note of the overnight low from the prior day. We traded below. Shorts get aggressive. That's what happens. It's generally foolish. I had mentioned this 43 spot as being really important for bulls to hold and not ideal for bears if it does. And so sure enough, it holds going into cash session, and from there we talked about on a true gap down, so we're below yesterday's cash range, which was here, and we're opening down here. First thing you're looking for is there any interest below the open? And there was absolutely zero. I mean, it just fired straight up basically today. Came up, tested yesterday's regular trading hours low, back down. This is where I called out the potential for a bid at 48. You can see just right off of here and here, these last idiots that wanted to short the whole, they're stuck. And then this last very obvious demand move and thrust at the open. So we do go ahead and bid that and trade back up. Stall a bit, sellers defend. Low a day from regular trading hours, as you would expect. They don't really get anywhere. We get the opening range breakout. Bulls were potentially in trouble here. As we came down to roughly the midpoint of the opening range. It's usually what tends to happen when you enter back into an opening range for the first 30 minutes. Your first target is the midpoint, but bulls were definitely at risk of a potential liquidation much lower, because what happens is you have a lot of volume in that first 30 minutes in the open. Both longs and shorts are positioned. Then you get breakout traders that play the breakout of this range. All these longs get bagged. Their stops start to trigger, and you get this selling pressure to potentially liquidate back below the open. I don't really see that as being as likely, given the fact that there was no interest below the open. So if I had traded this, shorting once we came back into the opening range, for example, it really would have just been a scalp to the midpoint. I would not necessarily have been looking to get all the way back down here. Just wanted to add that. Ultimately, we come up, we test 65 for a little stall. Sellers defend that, but call buyers just kept at it. They kept pressing. So as we came up into the 73 spot, I mentioned we were watching VIX to close its gap for the day, and sure enough, I think the exact same candle as high a day. VIX fills its gap. You get some absorption by sellers up here. And then they go ahead and they nuke it. One thing I had mentioned is the possible bid off this sequence here, okay, which let this move, 58, 59. And I also mentioned that I didn't think it was going to work. And I mentioned that right about here at 60. So what came in is what looked to me like a bid to cover. Basically, you've got a bunch of trap shorts from here. And then, so they were bagged up here. We come down. And when this spot to me is front run, I mean, this is where the buyer is. The buyer's not sitting up here at 60. To me, that was a bid to cover. And then what happens is you get longs that chase that bid. and they buy it. And this is all while this big seller is just happy to let out some weak-handed shorts. He's happy to see some generally weak-handed longs, the ones that are chasing, generally have weak hands, and then he just nukes it, right? Straight through the point of control. So at this time, the point of control for the session was here. So I'm going to go ahead and flip over to that profile. And I'm going to stop it here. So at this point, as you can see here is a point of control. Very nice normal distribution day. And when that happens, once we got here, that's when I mentioned, probably good spot to manage profits. You're getting pretty far away from value for the day. And really with about 40 minutes, I think we had left in the day at this point, sure, it's possible you can nuke down and create a completely separate distribution down here. But with 40 minutes, I mean, how are you going to create a second full distribution separate from this one? I see it as very unlikely. Usually these late day spike downs well below value or even well above value, I'll trade the other side of that because, again, value for the day is here, the Ferris price at 58. So it's sort of a mean reversion trade on a day that is a D-shaped profile. Now, if this sell had happened earlier in the day, then I wouldn't necessarily have felt that way. There might have been plenty of time to fill in another distribution down here with this, which is a very strong demand area, 29 to 37. But as it was extremely late in the day. And sure enough, we get shorting into the hole, into a major area of demand on a normal distribution day with the Ferris price up here at 58. Where does price go? Boom, right back. Just an absolute ripper. Right back. This is a very easy reversion trade to me, especially when you get a whole bunch of put buyers into the low a day. They're running out of time. Their puts are getting crushed, just absolutely crushed, and so they need to sort of panic sell them on the way up. You get these late shorts. Maybe they're not long puts. They're just actual shorts. They're stopping out and then just fire straight back to the point of control. So that's where that tweet came from. So that's about all I wanted to share today. Here we are in after hours trading. You do see that we're sort of floating, chopping between the regular trading hours low, which also interesting. Perhaps coincidence, perhaps not. That's where the point of control for today was. And between that and the overnight low from yesterday. So these are going to be key spots moving forward tomorrow. So we'll see what happens later on in the session. Would be interesting to see if we came back down to see if this price was fair or not. It obviously was deemed not to be fair today, but maybe there's more interest down here for tomorrow, or to see if we come back up here and retest this spot early in the session. So we'll see what it looks like in the morning. See you guys.